Destination Africa, brought to you by Standard Bank.
Just to pick up on where we left off that first half, Francisco, we had Sarah highlighting that, it's important to differentiate or make known the kind of wriggle room governments are actually allowed when it comes to ownership laws, property laws, and what they can get away with moving forward.
Yeah, look, I mean, from the clients that we talk to, when they look at, for instance, debates around reforms, let me say, make an example of mining reform. You've got to make a distinction between the legal framework in the country. For instance, in South Africa, you've got a constitutional framework which protects property rights, which are important when you talk about mining rights issues. Now, most of these clients understand this thing, that the state has a particular parameters within which it can make some changes to it. It cannot come up with something that is unconstitutional. The real battle is that middle ground, which is where ultimately do you land, within that particular framework. And I think people ought to be thinking about it that way. Clients ask these questions, they say, in a country, what does the Constitution say about property rights? Where is the debate going to? And what would the courts do in case government came up with something that we thought was unconstitutional? Would we be able to challenge that, to correct that? And it happens.
Well, at least that a positive, that the questions are being asked as opposed to staying away from the continent as a whole. Wole, what shifts or trends have you noticed when it comes to FDI flows into Nigeria over the last couple of years?
Thank you very much, Alicia. The investment regulation reform actually started from mid-90s in Nigeria. Then two legislation were introduced, the Nigerian Investment Promotion Commission Act and the Foreign Exchange Act. And this liberalized the exchange control regime and the regulatory framework for inflow of foreign investment into Nigeria. There is really no question about the fact investment in Nigeria are safe and are well protected. Indeed, in recent memory, there is actually no case of expropriation of foreign investment in Nigeria. And with development of commercial arbitration in Nigeria, foreign investors can actually go to commercial arbitration and resolve disputes with their partners in Nigeria or their customers in the country. So really, we've made substantial progress since 1995 in terms of promoting foreign investment in Nigeria.
Well, of course, when it comes down to it, Sarah, I mean, we had Francisco highlight a little earlier, investment into a country these days more often than not about leveraging your position into the rest of the continent. What strides are you being seen made when it comes to network economies?
In terms of network economies, and I'm afraid in economics that's a fairly specific term that we use for high fixed cost, low marginal cost businesses. I won't go into the nitty-gritty, but telecommunications would be an example of this. And there are interesting examples of what's been happening in telecommunications regulation, for example, that you saw such stagnation in the fixed line market, to some extent because regulators weren't allowing more than one operator in most markets. And then this enormous boom in mobile, which had a number of factors driving it. But one of the most important was that all of a sudden regulators were happier with issuing many licenses.
And that's where we have the success of the MTN story coming to the fore, the success of Bharti Airtel from India emerging as well.
Yes, in African markets where you don't have competition in telecommunications markets, you see very high prices in mobile. Competition specifically in mobile. You still see very high prices in mobile and lower levels of dispersion. The really good results have come where they've issued more than one license that allowed competition. So to some extent, this isn't a story just about waiting for foreign investment. This is also a story about freeing up domestic investors and domestic markets.
Let's talk about that then, talking across borders. We had the East African Market, Common Market Protocol signed recently in Kenya, and that opening up Kenya and East Africa to more fluid trade. Enough being done in that regard in your books, Francisco, to stimulate cross-border activity?
I think so, because for instance, in the banking and financial market space, if you look at the commitments that has been made globally at the G20 level about the kind of principles that we all want to see across the world. What that has done is spurred reforms in different countries so that when, for instance, a bank looks at setting up in Swaziland or looks at setting up in Botswana, it must almost see the same kind of framework that enables it to establish there. And as a result, you'll find a Standard Bank in South Africa, you'll find a Standard Bank in Zimbabwe, in all these places. What that is saying to you, cross-border, it's possible to do these things. It may be that in some countries they're lagging behind in terms of establishing more advanced systems, but there is a move. Global trends are pushing reforms in different countries so that it will make it easy to do business cross-border, even within the continent, in the region.
Wole, before you joined us ahead of the break, we were talking about the reforms that have taken place in the banking space over in Nigeria specifically. To what extent have you seen that kind of reform trigger a shift and act as a catalyst when it comes to FDI inflows and whether or not investors are more prone to doing business in Nigeria?
Thank you very much, Alicia. Banks are actually undergoing reform in Nigeria, as you rightly said, and there's been no short of interest by foreign investors in the banking sector in Nigeria. In the last 2 weeks, for instance, there's one of the biggest Nigerian banks called Union Bank Nigeria received an expression of interest from a consortium of international investors to the tune of $750 million. And really, the investor that was chosen was amongst many others who actually showed interest in these banks. Standard Bank Group is investing extensively in Nigerian banking sector. They showed interest in another bank in Nigeria, Afribank, but that was quite successful. So there's no short of interest in the financial services industry in Nigeria from the foreign investors in the country.
And of course, that is important, Francisco, because, the strength of financial systems is just as crucial to getting basic infrastructure right for any investor coming into a country. Yeah,
exactly. I mean, if you look at it, when you talk to clients, they say, look, we are interested in exploring, project finance type projects in the continent because South Africa is done and dusted as far as they can see. But they say we want to establish, say, a fund in a country like South Africa. So they'll set up a private equity fund here because the financial services and banking system is stable. And then they say we then go into the continent and find projects in those countries where you still have developing systems. So what it is saying to you, people want their money protected. They want to know that if they put their money in, they'll be able to get it out. If they want to move it cross-border, they'll be able to do that because that's where the business is at. Which means having these clear, regulatory, stable financial services systems is quite important. And you can see the developments within the region or within the continent.
Wole, on a sector basis in Nigeria, are there specific sectors that are more prone to FDI?
Well, we've seen a significant inflow in the oil and gas sector in Nigeria, and that's to be understood in the context of the fact that oil industry is a captive sector in Nigeria. Foreign exchange earnings from the oil and gas sector accounts for over 90% of foreign exchange earnings of Nigeria. So really, investments continue to flow into the sector. However, I have to say that in the last 1 year, investment has slowed down in the oil and gas sector. Simply due to the uncertainty in that sector because there's a pending legislation for the reform of the oil and gas industry in Nigeria called the Petroleum Industry Bill. So that really has cast some uncertainty in the oil and gas regulatory environments in Nigeria, and investors are adopting a wait-and-see attitude to see how the legislation is going to go to the National Assembly. Beyond oil and gas, we've seen investments in the telecom sector and in the service sector supporting both the telecom sector and also the oil and gas sector. Interestingly, last year, the manufacturing sector received close to $900 million in foreign investment flow into that sector. And really, that is significant given the experience of manufacturing industries in Nigeria.
Of course, that, Sarah, then alluding to the fact that we need to see an investment regime in place that is attractive enough to foreign money coming into the country. What about incentives for fixed investment? Are we offering enough incentive?
Incentives are a thorny ground to trade on. You can, as a government, you have scarce resources, there's a limited amount of tax money, you can end up throwing a hell of a lot of money at something which actually increases your economic inefficiency. And typically what you see is governments choosing an industry which is politically important and declining and refusing to let it die. And some would argue that the clothing industry in South Africa is an example of this. Incentives, if done well, can help. They're not my favorite tool for
And
encouraging
certainly not
development.
a silver bullet.
No.